It was a fairly mixed night for markets, with equities moving up and down. However, in this environment, the New Zealand dollar actually remained fairly steady, moving through around a 60-point range against the US dollar. The New Zealand dollar started fairly upbeat in the New Zealand trading time zone and lifted up to 85.50 against the US dollar before reaching some resistance and moving back. Moving into the US trading zone, markets were fairly upbeat. In particular, markets continued to digest the implications from the Federal Reserve meeting minutes that were released at the end of the previous day. The meeting minutes showed the Fed discussed a number of further alternatives they could use to stimulate the US economy. It showed that the Fed has many more tricks up its sleeve, and the markets are hoping that the Fed uses one of these options following the September meeting. Further adding to confidence was a stronger than expected manufacturing report. Recent regional reports had pointed to a decline in manufacturing activity. However, the most reliable indicator, the ISM index, which was released last night, showed that manufacturing activity only eased slightly. Most importantly, the index remains at levels that are consistent with further expansion in manufacturing activity. Market confidence soon faded in the afternoon on the back of a softer jobs report. This shows some downside risk going into payrolls over the weekend. In addition, markets were weighed by declines in telcos following a lawsuit filed by the US government against AT&T Mobile. Meanwhile, back in New Zealand, business confidence fell in August. The survey was taken at the height of fear and panic in markets, and as a result, it's not too surprising to see headline business confidence fall. The own activity measure of business confidence remained fairly steady, and this is the more reliable predictor of GDP. However, it was concerning to see some of the components decline. In particular, there was a decline in employment and investment intentions, despite own activity holding up. This does suggest that business decisions are becoming sensitive to uncertainty in the global markets. Overall, the business confidence survey shows that the New Zealand economic recovery is quite fragile, despite the stronger run of data of late. It does suggest that the New Zealand economy could lose momentum quite quickly. As a result, we do expect the Reserve Bank to keep the OCR on hold in the upcoming September decision. The Reserve Bank needs some more time to assess the impact of recent turmoil in global financial markets.